Hello everyone, I am Pratap here. We are at second part of HLQ zone analysis in lesson 29. Lesson 29 is about how to use NeoStock software generated different supply demand zone reports. Now we are going to focus on the second part of the daily or 75 minutes HLQ zone strategy. Even before that, all of you please understand, you should complete our supply demand zone price action course to make use of NeoStock softwares in an efficient way. You know that softwares always helps us improve the efficiency of our trading skills. And we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over $8,000. You can access all the training lessons at our NeoStock YouTube channel. At our channel homepage, click on the tab post. Some of you might be seeing the tab community. Click on that community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are at supply demand zone price action course. And before we are recording this video, we have released lesson 29.1.1. This lesson is about HLQ zone analysis. When we released this lesson, today before market starts, we have analyzed all the HLQ zones. Because we want to see the performance of HLQ zones, how they are performing during the live market. Because we've been claiming these HLQ zone strategy related zones are having 80%, a minimum 80% success rate. And many times the average intraday ROI is 6% or above. Of course, sometimes when the market volatility is very slow or very low, at the time we are getting between 3 to 6% or 4 to 6%. But on an average we are getting 6% ROI for our intraday trades point of view. Because HLQ zone strategy is limited to intraday related trades, but you are also having other trades related to short-term trading and swing trading. Those lessons you will be learning in the upcoming sessions. But those who did not complete the training course, I request you start our training from lesson 1.1. You just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So go through all these lessons one by one, and then strengthen your skills. And after that, you can look into the recent lessons. I have also provided a link to our Telegram channel in this video description. Please join our Telegram channel from the link available at this video description. It will be helpful to you. And now let's get into the lesson, second video of this HLQ or daily or 75 minutes HLQ zone analysis. The previous lesson we have analyzed the charts before the market starts. Now the live market is completed. Whatever the analysis we did, how they performed, that is one thing you have to understand. And second thing is, do we need to do any additional things during the live market? Yes, certain things you have to do. What are those certain things? That is fine-tuning the entry to get the minimum 1:3 RR. And dynamic fine-tuned zones concepts you learned in lesson 21.8. The 8th video in lesson 21. 21.8 lesson, I have explained dynamic fine-tuned zones. Those opportunities you can identify only in the live market. In the previous analysis charts, I have explained the Maruti, how dynamically you can create the entries. The possibility we analyzed. Exactly the same way, you also get new trade opportunities during the live market. The same Maruti, what we analyzed for dynamic target point of view, what possibility we analyzed, same possibility reverse happened. Now a new zone is created at the time and it gave a trade opportunity. A fine-tuned zone was created on the live market within our high liquidity zone. And today we got such kind of stocks, 2 trades we got for L&T and Maruti, that we will discuss. And we will also discuss some interesting concepts like bull trap, 1 minute HLQ zones, or some complex analysis how you can do, which I haven't discussed while analyzing the charts, because you are in the beginning, you are learning all these concepts. Now simple way you have to analyze the charts. But once you get experience how to do complex analysis, that understanding is also very, very important. When you are doing complex analysis, if you don't do proper analysis, your trades will be stopped out. That's why once you get experience, these concepts you have to apply. What I am going to focus on, like based on this bull trap, 1 minute HLQ zones, and all these things I am avoiding in the initial stage, because I realized that many of the people are making a lot of mistakes when you are dealing with aggressive trade setups, because 1 minute HLQ zone comes under aggressive trade setup. And the bull traps, sometimes these traps may not work, but you feel trapped, your trade will be stopped out, you will be disappointed, the concept is not working. That's why carefully you need to analyze the possibilities, you have to analyze properly. Generally, just like that, we draw the zone and we feel, okay, this is a trap. Next time when price comes, we will take a trade and the trap will be violated and your trade will be stopped out. That's why some price action clues and all you need to observe before you are selecting those things, because today everything happened. So many things happened in today, because we have around 9 stocks we analyzed. So we got an opportunity to observe or to learn many things from today's analysis. And also we got 5 trades today. Out of these 5 trades, 4 are successful. Only 1 is stopped out. That too with very minimal loss. That also you will understand when you get profits, how big profits we get. But when we get the losses, we get a very negligible losses. So all these things we will listen in the second part of the daily or 75 minutes HLQ zones identified by our NeoStock software in lesson 29. Okay, now let's get into the session. So in this lesson, this is already we fine-tuned this zone. See, today prices entered into the zone and reached the target. I am not explaining fine-tuning all these zones, because already we have analyzed all these charts in lesson 29.1.1 video. Now this video is 29.1.2 video. So in 29.1.1 video, whatever we analyzed the charts before the market starts. Now what happened in the market, that we are going to evaluate. While taking the trades in the market, what care you have to take, that also I am giving you the explanation in this video. Because if you don't take the care, sometimes you will be missing the trades. Sometimes you will be guessing a very less profit instead of getting a good profit. So that's why the care you should take care while taking the trade. See, the fine-tuned 5-minute zone worked very well. Prices entered into the zone and reached here. We have a 15 minutes target. See, here we have a rally, base rally. But when this rally, base rally was created during the live market, before the market, your target could have been somewhere here. Because of the last, today is Monday, 20 January. The previous trading is Friday, 17th January. So 17th January, you have some 15-minute zone here, rally to base candles and rally. Probably you will draw, your target is this particular zone. This is the 15 minutes demand zone. Initially, this is your target, your planned target. But once market is started, when market is started, in this candle, see, it is started creating rally, base, rally, rally, base, rally, again rally, base, rally. Now prices entered, you got the trade. Now your target will be in this particular zone. Earlier, whatever the zones are there, you can't plan, because the new Demand zones are created. When new demand zones are created during the live market, you should also change your target. But what is the rule? Minimum 1:3 RR should be there. If minimum 1:3 RR is not there, what you have to do? You have two choices. Choice number one, ignore the trade because minimum 1:3 RR is not there. But high liquidity zones, do we ignore the trades just like that? No, because high liquidity zones always provides great opportunities. Their success rate is very, very high. So when leaving a trade because RR is not there, it is not a good. Then without RR, how do we take the trade? This is a question mark, right? That's why you should learn a concept, fine-tuning the entry. What is fine-tuning the entry? See, where you take the trade in your 5-minute zone, right? Let us go to the 5-minute zone. Here you have the 5-minute zone. This is your entry, right? But from this entry till the 15 minutes target zone, you don't have 1:3 RR. Maybe you have 1:2 RR. Because 1:2 RR is there, you can't take the trade. But you can take a trade if you fine tune the entry. What is fine tuning the entry? Taking the deep entry. Rather than taking in this type 1 or type 2 proximal. In this example, type 1, type 2 proximals are same. Because the low of the candle and the close of the candle are almost same. So for that, what you have to do? Take deep entry. Go a little inside. So that what will happen? Risk will be reduced. If risk is reduced, what will happen? Your RR will be improved. That is what you learned in your lesson 5. In your phase 1 training. And phase 2 training, lesson 16, you learned fine-tuning the zones also. Now you are learning fine-tuning the entries. Rather than taking the entry exactly at the proximal line, instead you are going deep and you are marking some point. Till that point, you should get a minimum 1:3 RR. For that, we are going to use a trading view tool, long or short positions. You have the tools here, right? You have a long position and short position. These tools you will be using. Why you are using these long position and short position? To calculate the RR we are using. So how to make use of these tools? To fine tuning the entry. See, until the blue color line what I have drawn, I have fine tuned. That is my entry. Of course, stop buffer is added here. If I take entry in the proximal line, I am not getting the RR. Let me show you. First, let me start the tool. The short position tool from trading view. I already explained the long position and short position tools in our phase 2 training program. I didn't remember which lesson, maybe lesson 16 maybe. But please correct me. So if somebody knows the exact lesson number, you can put it in the comment section. Okay, here we have a short position tool. I clicked the tool. I have adjusted in such a way. See, initially, this is your target. What is the initially your entry? Your entry is somewhere here. And how much RR you are getting? 1:1.2 RR you are getting. It's almost 1:1 RR. Do you accept 1:1 RR trade? No. We don't even accept 1:2 RR. If you are an experienced person, highly experienced, maybe up to 1:2.5 you will accept. But we are all beginners. You all learned recently all these courses. Definitely you should make sure a minimum 1:3 RR should be there. But I am not getting 1:3 RR. I just got only 1:1.2 RR. What I have to do? One option is simply ignoring this zone. But leaving HLQ zones, a fine-tuned HLQ zones, might be missing you to get a trade, good trades. That's why we don't want to take a risk of missing this trade. Then we are not getting RR. What you have to do? That's why you should learn the technique fine tuning the entry. So how to fine tune? Take a deep entry. Just move your entry a little bit up, little bit up, little bit up, little bit up until you get a minimum 1:3 RR. Okay, now I am moving my entry. Moving up, moving up, moving up, moving up, moving up. And by the time it reached this blue color line, I got 1:3 RR. Instead of taking entry here, I am taking the entry at this blue color line I have drawn. Why I have drawn blue color? Because that is the entry. The moment I moved this, my entry in this long position, my entry when I moved up to this blue color, I am getting 1:3 RR. Before, if I keep, I am getting 2.49. Further below, I am getting 1.75. Further below, exactly at the distal line, I am getting 1.2 RR. So that's why we are moving, adjusting the entry, moving in such a way until we get 1:3 RR. Now prices reached here, we got the trade, and after that prices moved down and finally reached this 15 minutes target. But in this approach, you have one disadvantage. What is the disadvantage? Sometimes price may not reach up to your fine-tuned level. Before itself, it will turn and then it will reach the target. That way you will be missing the trade. But anyway, you are not getting 1:3 RR. Anyway, you will be missing the trade. Without 1:3 RR, you don't accept the trade. Let us assume luckily prices entered into your fine-tuned area. Then it will be a lucky trade for you, right? That is what happened in IRCTC. Prices exactly reached in the fine-tuned entry level. This is not a fine-tuned zone concept. Please remember, don't get confusion. Fine-tuned means, what is exactly the meaning of fine-tuned? It's like refining. We refined our entry. Rather than taking the proximal line, we are taking a deep entry so that what is that you are achieving? We are achieving a minimum 1:3 RR. If prices reach till that point, then you take the entry. If prices did not reach, anyway prices did not reach, we can't take the trade. Before reaching, suppose if the price did not reach, anyway it won't achieve 1:3 RR. If it won't achieve 1:3 RR, we won't take those trades. See, today prices entered in the blue color line even more deep, almost close to the distal line. It is about to touch. It didn't, zone is not violated. But after that, prices sharply moved down. Why it happened like this? Maybe today demand is very strong, but this zone supply is also very, very strong. It consumed all the supply. By the time it consumed all the supply, prices reached almost near to the distal line. Now no more demand is available. Now easily it pushed the prices slowly. Prices finally reached the 15 minutes target zone. This is the way IRCTC has given a profit 6,825 rupees profit it has given. And what is the ROI? The ROI is 4.9% as per one futures margin cost. I am always taking futures margin cost as a reference. That is our investment. So generally brokers, what they are doing, they are giving up to 5 times margin in futures. If you don't take profit, what you will get, your ROI will be, your investment will increase 5 times. Let us assume the original cost is 5 lakhs. The original cost of a future lot is 5 lakhs. Let us assume. Because broker is giving 5 times, you are getting 5 times lesser. That means for 1 lakh itself you can buy the future. So your investment is not 5 lakhs. Your investment is only 1 lakh. On 1 lakh, what is the profit you got? This is the profit. Of course, this is not 1 lakh. This is around 1 lakh 40,000 or something. I'm just giving an example. Let us assume this is 1 lakh, you got 6,800. That means ROA is 1 lakh, you got 6,825 means the ROA you will get, return on the investment you will get 6.8% ROA you will get. Because it is around 1 lakh 40 or 1.5 lakh, you got 4.9. So say close to 5 ROA, 5% ROA you got, return on the investment. So ROA is calculated based on your investment. Because broker is giving 5 times margin, rather than investing 5 lakhs rupees, you are investing only 1 lakh rupee. So on your 1 lakh investment, you will be getting 6.8% ROA if your profit is 6,825. Because its margin cost is around 1 lakh 40 something, around up, almost not exactly but near to that value. That's why you are able to get 4.9% ROA on your investment. So always I calculate the ROAs based on the futures. You may ask a question, why you are not calculating based on the options? If options, you may get even better ROA. The biggest problem I am facing with options is a risk management point of view. You should be an experienced option trader to manage the risk properly, but I am not good with options. So I am not focusing on that. I am happy with calculating with futures point of view. But if you are an expert in options, definitely you will be taking, probably you may get even more, better ROA you would have got. Instead of 5%, maybe you would have got maybe 10% or 11% ROA you might have got, who knows. But if your trade is stopped out, you will also be getting a bigger loss. That's why the risk management should be done properly. With the futures point of view, the risk management we can do in a perfect way, our calculations. So that is the reason why I am taking the reference. But remember, I am not limiting your trades to any particular instrument, trading instrument. Instruments like futures or options or equities, anything you can use. Okay, with the futures, our average ROA for HLQ zones is around 6%. Today we got few stocks less than 6%, but that is okay. Some other times we get bigger ROAs like 10%, 11%, 9%. So on average we are getting around 6% ROA for our HLQ zone so far. Okay, this is about IRTC, how we identified our target and also identified or fine-tuned our entry. Because it is not getting minimum 1:3 RR. That's why we did this technique. Okay, next one we discussed was Balakrishna Industries. Balakrishna Industries is a 5 minutes high liquidity zone. We identified, right? See, I am not analyzing any of these stocks because the analysis we already did in the previous video, just before market starts. And I released the video so that you will understand before market starts we did analysis and how it is working once the market starts. Now easily you will understand. See, here we have a fine-tuned 5 minute zone here. This is what we identified in our analysis. This zone is keep on testing for multiple times. Not only testing, a new 5 minute zones are getting created. Once prices are reached, that means a new order flows are added. LOTL zones are created. New order flows will be added in this area. See here, a new order flows are added here, rally base drop. So that's why what is that I suggested you? Take the trade as long as this zone is not violated. One day the zone will be violated. It will get expiry period. We never know when it is going to get expired. That day our trade will be stopped out. Until then we enjoy the profits. If it gives 4 times profits, 4 times we will enjoy. The day when it is violated, your loss will be very minimal. That is almost negligible loss. You won't care about that because we enjoyed the profits earlier. This is how you should deal with 5 minutes high liquidity zones. If it is a fine-tuned 5 minute zone, you will take as many as trade. If it is not a fine-tuned but a 5 minutes high liquidity zone, still you take as an aggressive trade setup. There also we will enjoy the profits as many times it gives until the day it is violated. See, here also it gave a trade. And see today what happened? Today prices entered into the zone and then sharply came out and finally reached the target. I think it has given around 1:4 RR it has given before reaching this 15. Actually, this is not the 15 minutes target. So what is the point I told you? We will also talk about 5 minutes HLQ zone as a target zone. Sometimes we have 5 minutes high liquidity zone, so they will not let the prices to go up to 15 minutes target. Go to the 15 minutes time frame. This is not a 15 minutes target. You have a 15 minute zone somewhere here. So till this area, prices should come down, but it is impossible because the trade itself is happened during the last half an hour of before market closes. I know many of intraday traders may not be trading during the last half an hour or 1 hour of the trading. But high liquidity zones point of view, we may see trade opportunities even last 5 minutes, 10 minutes also. That is what we experienced previously. And today the Balakrishna Industries, once again it proved. The fine-tuned 5 minutes area, which is a high liquidity zone, again pushed the market up to the 5 minutes high liquidity zone. Let's go to the 5 minutes time frame. See, here we have a rally base rally, and this zone is keep on testing for multiple times, and here you see again drop base rally is created once again. So LOTL zones are getting created from the same 5 minute zone. Mostly it indicates it could be a high liquidity zone. Exactly till that zone the prices reached. And this is the way during the last half an hour of the market, Balakrishna Industries has given a profit. 5,550 rupees profit, which is a 3.6% ROI as per one futures margin cost. Because I clearly told in the earlier analysis video in the morning session, the video when I released before market starts, I suggested you take as many as possible trades from this 5 minute zone until it is violated. How perfectly our 5 minutes high liquidity zone worked. Generally, if the fine-tuned 5 minute zone is a tested zone, we won't take the trade. But if it is a high liquidity zone, how we know it is a high liquidity? Maybe based on multiple times the zone is getting tested, or maybe LOTL zones are getting formed from this zone. All these are all clues to predict it could be a high liquidity zone without help of the software. So that way we predicted this could be a high liquidity zone. Multiple times this zone is tested, and sometimes this zone is also created LOTL zones. All these are all price action clues. So that way we got Balakrishna Industries has given a successful trade. And what else we got? An important stock that we should analyze is Maruti. Maruti is a 75 minutes high liquidity zone that we analyzed. And let's go to the 15 minutes time frame. See, today's morning 15 minutes candle when market start. Let me hide this candle for some time so that I can tell what we discussed in our previous analysis video. In the previous analysis video, I told there is a drop, base. We talked about dynamic targets. The dynamic target we already seen in the previous analysis stock, that is IRCTC. Because during live market a new 15 minute zone is created, and we adjusted our target to the newly created 15 minutes in the live market. The same thing I discussed in the morning analysis video. The drop base is already there. I told you there is a possibility again a rally candle will be created, and we may get a trade opportunity from this zone, because this zone is also having some of the HLQ related characteristics this zone is having. So that is the reason why we thought maybe we may take another entry from here, and again it will push the market down. But reverse happened. What is the reverse? Instead of a rally, instead of drop base rally, now drop base drop is happened. This is the morning 9:15 candle in today's live market. In lesson 21.8 video, I have explained dynamic fine-tuned zones concept. What that concept explained in lesson 21.8? During the live market, new zones will be created, fine-tuned zones inside our daily high liquidity zones. Those fine-tuned zones, again we get trade opportunity. See, we are in the 75 minutes high liquidity zone. This is the 75 minutes high liquidity zone, Maruti. And inside the 75 minutes high liquidity zone, today in the live market, what happened? Drop-based drop is confirmed. Now immediately what you have to do? In the live market, you have to draw the zone. Drop-based drop. And immediately you should look in your chart. How I analyzed the chart in the previous video, exactly the same way you have to analyze in the live market. Okay, now we have drop-based drop. A new 15 minutes fine-tuned zone is there inside the 75 minutes high liquidity zone. Now what is the next goal? The next time frame, that is 5 minutes time frame, is there any fine-tuned zone is available? Now go to the 5 minutes time frame. See here, actually before today this zone is created, institutions are already set in 5 minutes order flow. Drop-based drop is here. Before this order flow, we have this drop-based drop. This 5 minute zone is an horizon. Lesson 22 concept. What did you learn in lesson 22? Lower time frame zone as an horizon to the higher time frame zone. That lower time frame zones will be having a very strong institutional order flows. And these lower time frames you will be seeing at the distal line of the higher time frame zone. See, we have a drop-based drop is already there. From this zone, it picked up the orders. Today morning, prices, the leg out entered into the zone, picked up the orders, and strongly the prices came down. See a big move and follow through candles. A considerable strong move. This indicates this drop-based drop is an horizon to this fine-tuned, newly created, dynamic fine-tuned 15-minute zone. Today, a dynamic means live market. In the live market, a new 15-minute zone is created. That 15-minute zone already created drop-based drop, 5-minute zone. It picked up the orders and the entire 15-minute zone formation has been completed. That way we are concluding this drop-based drop will be having a very strong institutional order flow. So next time prices enter into this area, we should not miss our trade. But that happened today itself. Today here we have a high liquidity 5-minute zone. Why high liquidity 5-minute zone? I will tell later. From there it picked up the orders and prices moved up and reached this drop-based drop lower time frame zone horizon to this 15 minutes fine-tuned zone. Dynamic fine-tuned zone. That area it went and it gave a trade and then sharply prices came down and finally reached this 5 minutes high liquidity zone and started moving up. Actually this 15 minutes drawn, this target zone I already drawn in the previous video. In the morning when I explained this HLQ zone analysis video before market starts, we have drawn this 15 minute zone. This is the target, rally base rally. Then what is that I told? The drop base, a new rally is created. Our target will be changed to this newly created one. That is what we discussed in Maruti analysis. But what happened? Reverse happened. Instead of drop base rally, drop base drop is created and our lesson 21.8 concept is now performed here. And according to that concept, and this concept lesson 21.8 video concept is mixed with lesson 22 concept, that is lower time frame zone horizon. Both the concepts together gave a trade. And whatever the 15 minute zone we have drawn, still it is valid to book the profit. Because see, it picked up and prices were coming down. But before reaching here, somebody stopped the fall. Who is that somebody? A 5 minutes high liquidity zone. How can we say this is a high liquidity zone? See here we have a drop failed ERC candle, rally, base, rally, and follow through candles. We have drawn this 5-minute zone. Now this is a normal zone. If you take software help, it may give high liquidity, or sometimes software also may not identify. That possibility is also there. Now you look into the zone and observe what happened today. Today at 11 o'clock, again a drop base rally is created. LOTL zone to this 5-minute zone. 80% scenarios, you see such kind of price action if this is a high liquidity zone. Because of this drop base rally, what will happen? Again a new order flow will be added into this zone. And not only you see how it pushed the price, drop base rally, up to this 5-minute zone, which is the origin. Drop base drop is the origin for this newly created dynamic fine-tuned 15-minute zone. Pushed the prices. And where this zone is available? Just before the 15-minute zone. This is the actual target 15 minutes. But there are higher chances this high 5 minutes high liquidity zone may not let the prices reach here. So the advice is always that at the 5-minute zones you need to book the profits. So that's why you should understand the importance of the high liquidity zones at 5 minutes level. During intraday, they may not let the prices reach our 15 minutes target. So as a wise person, we should book the profits at those 5 minutes high liquidity zones. So this is the area you should book the profit. And when it reached this zone, today at 14:25 candle it reached. When we got the trade at 12 o'clock 5 minutes candle. And this is the way Maruti, how much profit it has given. Maruti has given 7,100 rupees profit, which is 6.6% ROI as per one futures margin cost. So in this Maruti stock, during the live market, lesson 22 and lesson 21.8 concepts together, the zone formation has taken place. That's why understanding all these lesson 21, lesson 22 is a new concept I developed. You know that if you would have already completed lesson 22 concept. And lesson 22 is a very powerful concept, lower time frame zone as an horizon to the higher time frame. See that concept, today it gives 6.6% ROI in Maruti. This is the highest ROI I got in today's trades. And not only that, how sharply it moved. The trade is at 12 o'clock we got, 12 o'clock 5 minutes candle, and reached the target at 2 o'clock 25 minutes afternoon. In less than 2.5 hours, the trade is completed. Okay, this is about Maruti. The next one is L&T. L&T is also a dynamic trade, the dynamic fine-tuned zone created today. We have already seen this 75 minutes high liquidity zone. Today we fine-tuned with 15 minutes time frame. And this 15 minute zone is having a fine-tuned 5 minute zone that we have seen in 5 minutes time frame. That is what we analyzed in the previous video. And we decided not to take a trade in this zone, fine-tuned. The reason is, this is already tested. But if you observe properly today, a new 5 minutes fine-tuned dynamic zone is created. Dynamic fine-tuned zone within the 15 minutes area. See, within the 15 minutes area, we have a failed ERC candle as a drop candle. 2 base candles and a drop candle. That way you can treat. Or maybe if you are convinced this is also a failed ERC rally candle, this is the leg-in, base, drop. Either way is okay. This is a new 5 minute zone is created, fine-tuned 5 minute inside the 15 minute zone. This 15 minute zone is already we have drawn. That has a newly created, that has a old fine-tuned 5 minutes tested zone. But today, within this fine-tuned 15-minute zone, we have a new dynamic fine-tuned 5-minute zone is created. And today when we got the entry at 13 hours, 15 minutes. So afternoon, 1 o'clock, 15 minutes, we got the trade. And when it reached the target at 225, it reached the target, 15 minutes target. See here we have a 15 minutes target, we have a failed ERC candle as a leg-in, this one. Or even this next candle also you can consider failed ERC candle, large candle as a leg-in. You have 1, 2, 3, 4, 5, 6 base candles. This is the medium size leg candle part of the base. But actual imbalance started from this. But here, most interestingly, when I looked into the 5 minutes, there is a 5 minutes order flow, rally, base, rally. This may not let the prices to go further below. Below also we have rally, base, rally, 5 minute zones are there. If this order flow is not there, we would have fine-tuned our target to this rally, base, rally. So because of this rally, base, rally, this is the area. That means exactly the 15 minutes order flow. Why we are doing such kind of? Because we have a 15 minutes candle, a medium size candle part of the base. If there is no proper order flow here, at least we get a chance to prices reach here so that we get more profit. See how we are analyzing complex analysis. These are all some kind of complex analysis to grab better profits. But here, because the moment I observed here 5 minute zone is there, then I don't want to compromise. I want to exit here itself, book the profit. I don't want to go for a deep inside to book the profit. See how we are not taking risks by doing even a little more complex analysis. And exactly perfect profits we are grabbing, and moreover it is having 1:4 RR from here to this 15 minutes target. Excuse me. So this is how much profit L&T has given. L&T has given 4,155 rupees profit, which is 4.3% ROI, because the margin cost is very less compared to the other stocks. One future margin cost of L&T is much lesser. That's why even the overall profit is less, still we got better ROI, that is 4.3% ROI we got. Why I am saying like this? Because Balakrishna Industries, we got 5,500, but ROI is only 3.6%. But L&T we got 4,100 rupees, 155 profit, but ROI we got. That means compared to Balakrishna Industries, profit is less, but ROI is more. It is all because of futures margin cost. That plays the major role. The future margin cost is your investment. This is how you should understand. So this is about L&T stock. And there is one more stock is triggered today, but which is stopped out. That is JSW Steel. Actually, JSW Steel, we got a trade also, but that trade we didn't analyze. Why we didn't analyze? Because I don't want you people get into that level until you get experience. But I will show you what is the JSW trade. So first let us see how our stock is stopped out. Today morning we discussed the JSW. This is a 75-minute zone. It is having two order flows. And one is already a tested one. So we didn't plan any trade here. Morning we discussed this zone will be violated easily, because it is already a tested zone. But here we have a fresh zone. That fresh zone is violated. This is the one, rally base drop. This one we fine-tuned with 5 minutes time frame. That is what we discussed in our previous video. Before the trade starts in the morning session, we analyzed. In that we identified this is a very good zone. But today what happened? This is violated. Why? Maybe demand is very strong. And this one, this second fine-tuned zone, already we expected this will be violated easily because it is a tested zone. This zone is already tested here. Prices also went deep inside, close to the distal line. Okay, but here what is the learning? Have you noticed? Price just went up and again sharply came down. It might have given a very good profit. Why? Because in lesson 21 you learned traps, bull trap and bear traps. For supply zone, above supply zone you have bull traps. Below the demand zone you have bear traps. We have a bull trap here. Okay, you may ask a question, why we didn't analyze? Because in the recent time I am focusing very less on traps and aggressive trade setups unless they are high liquidity zones. Because the last 6-7 months I have observed, based on by seeing some of the feedbacks from you people, you are making a lot of mistakes when you are dealing with the traps and aggressive trade setups. That's why I suggested all the members not to take aggressive trade setups and traps until you get some experience. Because a lot of price actions you need to observe to confirm this could be a possible trap or this could be a possible aggressive trade. Without having proper experience, wherever zones are there, just like that you are drawing, and with some price action clues, may not be accurate, those price action clues, but you are considering them, and finally the trade is getting stopped out. And finally we are saying aggressive trade setups are not working properly, or traps are not working properly. It's not that they are not working properly, it is our experience that matters a lot. How well you are understanding the price action when you are dealing with those zones. See, this is a 75 minutes high liquidity zone. And how we are predicting there could be a possible trap, have you noticed? There is a rally base drop here. This is the one overlapped with. This is the 75 minute zone. This 75 minute zone is overlapped with the bottom one. That means in this area there is a strong order flow. Actually this is the origin. This rally base drop is the origin for this our high liquidity zone. So this area definitely there could be some strong order flow might be there. Above this zone, above this particular zone, some order flow might be there. And that is not visible clearly here. That's not visible here clearly. Because we didn't have proper leg out structures are here in this newly created. Go to the 5 minutes time frame. Probably within this 5 minutes time frame, you might be having some strong institutional order flow, might be there. See here you have a drop, base, drop. This is not a fine-tuned zone, but this is a high liquidity zone. Why? See here prices came down, picked up the orders and then came down, again picked up the orders and again came down. Probably this is the area we have a strong order flow might be there. See today what happened? When this high liquidity zone is see from this area again sharply it came down. This 5 minute zone area. Exactly from here it moved up, moved down. But here you may ask one question here. This 5 minute zone is already pierced here. See, slightly pierced. Maybe because there is a rally based drop, but this is looking like a failed ERC. Now go to the 3 minutes time frame, you get better clarity. Maybe a strong order flow might be there, which is the origin for this entire area. Here also it is not clear, very clear here also. Go to the 1 minute time frame, probably there you might be having better clarity. Yes, this is the one. We have pro gaps are here. We have a drop. From here you see drop candle at the hidden body, drop. Again at the hidden body, drop. Now prices entered into the zone and came down. Probably this is the one playing the role. From there again it picked up the orders and entered this. This is also origin. This 1 minute zone is also origin to this entire 75 minutes high liquidity zone. Now let me delete this 75 minute zone. Basically this is the LTF for this lower time frame for this origin. And today what happened? Today also it picked up the orders, but this is also slightly pierced and finally prices came down. This LTF zone is slightly pierced. So that means order flow is consumed completely. But finally after that what happened from this level? It might be within your stop buffer area. But again it has given a good movement towards down. Probably here some 5 minutes or 3 minutes high liquidity zone might be there in this area. That is holding the prices here. Let us go to the 5 minutes time frame. See somewhere here we have a rally, base, rally. This is the one today holding the prices. Till this level prices are reached and moved up, again reached, again moved up, again reached and moved up. This is strongly holding the prices. See, a lot of detailed observation you have to do. It's not easy to identify them. So these are the reasons why we are not including in our analysis in the early stage. But once you get better experience, you will be in a position to judge them in a better way. But for us it is just topped out trade, that's it, nothing more. But we are evaluating the possible opportunities what we would have missed from this particular stock. It has given a good opportunity. That opportunity is from either lower time frame zone origin, or it could be a bull or bear traps. This is the way you should understand. Because origin is also at the distal line. We have 1 minute origin. So up to 1 minute level after we analyzed, we identified the origin. But the origin also slightly pierced. But that is okay because it is within the stop buffer. After that it gave a big move. So those who took a trade and stopped out in this, and if you would have identified the origin, you would have taken another short trade and you would have got a good profit, and whatever the loss you got, minimal loss, that you would have recovered easily. What is the loss we got? 1000 rupees, which is 0.9% ROI. As per one futures margin cost, less than 1% of your investment. See, but when you get the profits, we are getting 6.6%, 4.3%, 3.6%, this is the least in today, 4.9%. You are getting good profits. But when you are getting losses less than, see previous loss was when it is on the 15th January, it is only 0.6%. And this loss includes the stop buffer value. You have 0.6 stop buffer is there, that includes this loss. So this is JSW Steel, and a few trade opportunities also you would have got, but we didn't analyze very deep. Why we didn't analyze? Because you are learning. When you are learning, taking complicated price structures or price action concepts Generally, I call it as a price structures in identifying the zones. Sometimes we compromise and we draw the zones. In that compromised area, we have fine-tuned areas. They work very well. But when you, without having experience, when you compromise and started drawing the zones, many times you will get stop loss. That level you have to reach only after getting some good experience. First, how many trades we got is not important. Even if you get few trades, if they are successful, you will be happy, your confidence will go. After that, you can look for more and more trades. Even some of them stopped out, still okay, because your volume is very high. That is only after you get experience. After 2 years experience, or 2.5 or 3 years experience, you have to go for complex analysis. I'm already making some videos in the old HLQ zone analysis videos. But today, first time in the training lessons, I'm including these complex analysis, because this will be a future reference for you. Because HLQ zone videos, I may stop in sometime in future. It may not be every day. At present, I have to promote my software. People should understand how powerful this HLQ zone analysis. Every day I'm making these videos. But it is taking a huge effort of my time. Because 1 hour, my billing rate is now, today, as on today, it is definitely not less than $150. My 1 hour's effort in making these videos. The cost. But tomorrow I can't invest this much time. At the time you may not be having HLQ zones. All these HLQ zones will be very old. But your training videos will be visible to everybody. Because it is a free training to everyone. From the playlist you can directly access. So this recorded video will be available to you. That's why I'm doing some complex analysis also today to make you understand. Today if you don't understand, maybe after 1 year, if you attend this lesson, you will be able to understand the concepts I'm explaining in this video. See, about India, we can do complex analysis. How? Let me show you. Let's go to the daily. Today morning also I told you, I am not analyzing because it is not very clear. If you remember, if you look into the previous video, you will understand. I have taken only this 75-minute zone as a reference. You have one more 75-minute zone in this area. Recently when prices here, they picked up the orders moving up. At the time a new LOTL zone is created here. But that structure is not clear. But let me show you. Still how we can identify. See here. We have a drop candle, we have a 2 base candles, and then you have a rally candle. This is a LOTL scenario. But before the prices reach this fine-tuned area, any order flows in this area has to be consumed. But why we didn't focus today in this area? Because you should do the analysis very, very carefully. Otherwise, many of the time the order flows in this area will be violated very easily. You draw this LOTL 75-minute zone. This is the 75-minute zone. So in this drop base rally, definitely you have some 15 minutes order flow. Within that you have 5 minutes order flow. They may not be visible clearly, but properly, with proper observations, by adding some of your experience, you can able to find them. Go to the 15 minutes time frame. See here you have a drop candle. You have 3 base candles. This is a failed ERC, but you can use this as a rally candle. Here you can draw a zone. This is the 15-minute zone. And also you can draw one more zone. Here you have a rally candle, failed ERC as a rally candle. You have a base candle, you have a rally candle. And many of you might get a doubt whether to consider this or not. Small in size. That is what sometimes we compromise and we draw the zones, not at the 5 minutes level. 15 minutes level or 75 minutes level, leg out structure is really doubtful, still we compromise and draw. These are the fine-tuned zones. If we have a proper 5 minutes order flow, this compromised 15-minute zone will give you good results. But 5-minute structure should be very good in this area. And these 2 order flows again you can fine-tune with 5 minutes time frame you have to fine tune. Within this area, is there any proper order flow is available here? It looks like a lot of consolidation took place here. Taking a trade from this area is a little risky. So we can leave this. But what about here? Yes, we have a rally candle, we have 3 base candles, and we have a rally candle. But the risk is very high. Because why risk is high? Almost our 5-minute zone is almost same as the 15-minute zone. Here you should apply your tactics, your experience. From where the actual imbalance is starting, but not reflected in the candle. So if you ask me like this, I will say from this candle the imbalance started and then continued and moved up. That way what I can do, I can minimize the risk. Now I am making my entry up to this level. If you still feel risk is high, you can reduce, you can take a deep entry, nothing wrong. But this is a fine-tuned 5-minute zone. This is not the leg out. This is the leg out. But why we kept this outside? Because the actual imbalance started from here. That is what experience, I meant by experience. Why I didn't include this today in analysis? I don't want you people to focus on these concepts until you get perfection. But whatever the analysis I am explaining, this is for your future reference point of view. If I am not making everyday HLQ zone analysis, you may not be having all these videos. Now if I record in the training video, this will be there for your reference forever. That's why these complex things also I am including in today's analysis. See, today we got an entry and prices moved up. Again we got the second entry. Again prices moved up. You would have got good profit. Maybe minimum 1:3 RR it has given. Let us verify. At least. And this is another point I am supposed to tell you. Sometimes prices may fail to reach 15 minutes target zone. At the time, if the fine-tuned zone gives a minimum 1:3 RR, it will be a successful trade. If 1:3 RR, if it fails, maybe the fine-tuned zone could be a failed trade. That way you have to consider. Approximately some buffer I am adding. Let us say this could be your entry. See, 1:3 RR it achieved. Almost 1:3 RR. Maybe a little more. Let me reduce up to here. 1:2.9. It's almost 1:3 RR it achieved. Next one, entry again further moved up. So both the entries, they achieved minimum 1:3 RR. It achieved 1:3 RR, prices came down, gave another trade and again gave another 1:3 RR. Why we are looking for 1:3? Because they failed to reach 15 minutes target. Here you have 15 minutes target. You have drop 1, 2, 3 base candles and again a drop candle, follow through candles. Supply is very strong today in this stock. But still demand is also equally strong. But not good enough to push up to 15 minutes target because of the supply. But minimum 1:3 RR level it has given. But have we included this in our today analysis? No. Why? Because the 15 minutes structure is not good in this area. The 15-minute zone we compromised and we have drawn the 15-minute zones. $15 minutes or 75 minutes I'm talking? 75, okay. 15 minutes time frame. Yes, this is the one. This leg out was somewhat doubtful. Is it really a medium size or large? Some question mark. See, this is a large, definitely you say. But we compromised and we draw. Sometimes what happens because of this leg out you compromised and you have drawn, it may make your order flow fail because 5 minute structure is also not proper, say for example. Now here 5 minute structure is good. But only thing is 5 minutes risk is very high. Because risk is high, what we did? We identified where exactly the imbalance is getting started. Both these candles moved in a narrow range. Now it is going out of, because the time is completed, this candle looks like a medium sized candle, but continuation another candle further moved. That way I am assuming this is the area from where the imbalance started. Probably this is the area the actual institutional order flow is there. How I am able to tell? Based on my experience. And when you will be able to tell, once you get a minimum understanding in the early stage, you won't become an experienced person on the day one itself. Slowly you have to understand the things in the market. And then you will be able to understand the price actions in much better way. Based on the price action only I am able to tell. The imbalance started from here. So this is how you should understand. See how we did complex analysis. The complex analysis is able to find the trades. Here most important thing is finding the right trades. That is important. Even before finding the right trades, most important thing is finding the safe trades. What the analysis we did today morning is completely a safest analysis. We didn't take any risks. When you take risk, sometimes you get some of the trades will be stopped out if you don't analyze properly. What I am trying to say, don't take such kind of risks in the early stage until you gain some experience. You look for a clean and neat fine-tuned zones in the early stage. Even if you missed some trades, not a problem. Even if you didn't get some trades for few days, not a problem. Building confidence is important. That's why don't take any additional risks while analyzing the charts. Once you get experience, that is the time you have to take a risk. Because you already gained experience, by seeing the price actions you will be in a position to tell. See, this is the one how I ignored, because I am seeing a lot of consolidation here. Such kind of consolidation I didn't see here. That's why these trades, this zone worked multiple times. Because during intraday you can take multiple trade opportunities if the order flow is good enough. Because prices did not go deep. That's why you don't mind to take second trade. This time it went deep. Next time definitely this zone will be violated. And AU Bank didn't get, prices did not reach at all. This is a daily zone. I am not analyzing these zones because already previous video we have analyzed all these zones. So today price did not enter into this fine-tuned zone. IRCTC we discussed. Next, what is that? Marico. Marico also prices did not enter into this fine-tuned area. Tata Steel. Tata Steel is also a daily supply zone. Prices did not, they went very close but did not enter into this fine-tuned zone. Balakrishna Industries we discussed. This is delivery. Delivery is one area. See, previously this zone is just touched and sharply came. Because of sharp rejections, what I suggested you can plan a trade in this in case prices. But today, market itself is opened with gap up and above this zone. This is the advantage with intraday trading. When market opens with gap up above the zones or below the zones, we want to consider the trades. Because order flow is gone, completely it is gone. It's no more a valid zone to take the trade. See, today market is opened just above the zone. After that prices came down. Maybe somewhere here some order flows might be there that might be pushed the prices down. Or maybe some traps might be there above this zone, might have pushed the prices down. So that's why delivery we won't consider this is a failed. Why it is not failed? Because opened with gap up. Already it gave an opportunity for us. Still we are looking for another opportunity by seeing the rejections from this area. because we believed a strong institutional order flow will be here. But demand is much stronger than the supply it might be having. That's why it opened with a gap up. Our institutions might have cancelled some sell orders in this area. Maybe they might have got some news or something. Anything will happen when when prices are open with gap up above the zone or gap down below the demand zone. There could be some strong news will be there. Institutions are cancelling their order flows. Some strong reasons will be there. Then only prices will be moving sharply like this. Next one is Godrej. This is the last stock we haven't discussed. Godrej is very interesting. Go to the 1 minute time frame. Why I have drawn, you may ask this question. There was a pro gap. With pro gap, this leg out was created. This is a 1 minute supply zone. Okay, prices came, almost it tested. Again today, prices went, tested, and again it came. I think I made some mistake here. Did I? While drawing this zone, something. Yeah. Have a drop, base, a drop. This is the one we have to. This is what? We have drop. All these are all base candles. See here, small candles. This is also a base candle. Now this is the exact 1 minute high liquidity zone. Have you noticed? Again a rally base drop is created from the same area. When such kind of things will take place? If this is a high liquidity area, then only new zones will be created from the same zones again and again. Previously also, see this is a failed ERC as a rally, maybe this is a base and drop, but structure is not very clear here. That structure is not very clear. But today it is confirmed in the live market. Why we didn't identify in our earlier analysis? Because we limited our analysis to 5 minutes level. But I promised I will explain even complex analysis related scenarios, how we could get trade opportunities. And moreover, when it is confirmed in this candle, it confirmed a rally based drop. Maybe this could be a high liquidity zone, at least 80% scenarios. We have two strong reasons. One, LOTL zones are created from this zone. Such kind of characteristics you see in high liquidity zone areas. And another thing, this zone is already getting tested several times. It is already tested once on 10th January 2025. Next test when it happened? Today. 20th January. Third test again happened today, but in the third test again a rally based drop is created. Right? Now today at 15 hours, that is half an hour before the market closes, prices entered in this zone, and how sharply prices came down. If you would have taken a trade in this zone, definitely it would have reached some good target. See here, you have a failed ERC, two base candles and rally. This target would have been achieved. This is a 15 minutes target. So that means when you got this confirmation that this could be a high liquidity zone, during the last hour of the market, here you see you have a rally based drop is created. You can also consider 1 minute is the lower time frame zone. This lower time frame 1 minute zone is the origin for this 15-minute zone rally based drop. Now you can, not only that, this is a dynamic zone concept also. Now go to the 5 minutes time frame, check whether there is any 5 minute zone is available here. In the 15 minutes area, where is 15 minute zone? This could be our 15 minute zone. But remember, origin is 1 minute. So that's why always you have to plan trades from the origin. I'm just checking whether there is any fine-tuned 5 minute zone is available here. Maybe same area again 5 minutes also. Because you have a rally, 1, 2, 3, 4, 5, 6 base candles and a drop candle. See, it is already tested. Again prices came down. Once again it is tested. This time it went to the origin. From the origin prices move. So this is the fine-tuned 5 minute zone trade, because 15 minutes and fine-tuned zone trades. I'm not saying this is a successful trade. You won't take this trade at all. Why you won't take this trade? Because this is a risk is very high in this zone. This is equivalent to 15 minute zone. Risk is very high. You won't get RR. But if you go to this 1 minute zone, definitely you would have got some RR. You have LOTL, one more zone is created. Go to the 1 minute. Previously LOTL zone is created, right? Or you will keep your stop loss up to this if you feel risk is high. Take entry here. Risk up to here only. That way also you can consider. Why entry here? There are higher chances. Prices may not enter more deep because new order flows are added again here. Every time when you add new order flows, it is getting new order flows, but when prices every time are entering here and moving up, the demand is getting consumed. But still new supply is here. See, by the time prices reach, the supply is the demand is completely gone, and the supply, how easily it pushed the prices down. This may be a valid trade or may not be a valid trade for the risk point of view. But what I am trying to tell, how you need to perform complex analysis. How HLQ zones provides you several opportunities. That is what I am trying to explain in this video. All these trades we didn't plan at all. But I am explaining these concepts as a reference to the future point of view, your future. You can go back after gaining some experience. You come back, again listen these videos. Then you will understand the essence of what I am trying to explain to you. If you think like an experienced person, you will be able to understand what I am trying to explain. Still as a beginner, if you are trying to listen these videos, maybe half you will understand, remaining half you don't understand. With that half knowledge, if you take decisions, your trades will fail. That's why I am suggesting. Don't go for complex analysis at this stage. But remember, we can analyze these charts in a complex way. That is what you should understand at this point of time. How to do this kind of complex analysis? Once your experience grows, you will be in a position to understand in much better way. On that day when you listen these videos, whatever I am trying to explain, with crystal clear clarity, you will understand them on that particular day. Today it is only a reference. The second part of this video is whatever I am discussing. Because trading at 1 minute level is quite dangerous. If you don't analyze properly, if you don't observe the price actions properly. When I confirmed, after multiple tests, I didn't confirm. After seeing this LOTL zone, rally base, drop, then I confirmed maybe institutions are creating new LOTL and they are adding new order flows. When you have new order flows in the zone, then only confidently we can go for a next trade in that zone. That is this time. This time it gave a very big profit. But if the risk is high, again you have to fine tune inside this level. Okay. So anyway, this is how you have to analyze the stocks. Already we did analysis, we got trades, couple of trades, and again during the live market, as per the lesson 21.8, that is a dynamic fine-tuned concepts. We got a new fine-tuned zones in the live market. Those trades worked very well. Again, lesson 22 related concepts also you have seen in the live market, in the dynamic zones you have created. And also we discussed how we can fine tune the entries. That is very important skill. When RR is not good enough, how we can fine tune the entry so that we can get. See, don't go very, very close to the distal line. A minimum order flow you should ensure. If you are going very close to the distal line, you get any RR, any kind of RR you will get. If you feel after fine tuning the order flow is very small, there are higher chances that stop loss will hit, then don't take the trade. That point is also important. Otherwise, you will almost close very near to the distal line and you will think, okay, now I am getting RR, and you take the trade, and next minute, next second, the zone will be violated. Don't take. A minimum risk should be there. That means a order flow. Risk is nothing but your order flow. That should give you confidence. Okay, this order flow might be good enough to push the market down. That kind of confidence you should get. Then only you take that trade. Otherwise, leave the trade. Look for some other stock. So all these things slowly you will experience once your experience grows. So this is about our second part of this HLQ zone analysis, and this is the last video of HLQ zones. Next video we will be focusing on bullish and bearish trade setups. First we will see monthly income trades, later weekly income trades, later daily income trades. No, I will do in reverse. First we will see daily income trades, and then weekly, and then monthly income trades. Probably next weekend, if I have time, I will be analyzing those DIT trades, daily income trades, how to analyze with the help by taking the help of the NeoStock software generated reports. Because some people are taking the subscription, but you are not understanding how to use them. So I don't want that to happen. That's why that is the main essence of providing this lesson. Because some of our members requested for this lesson. So now we completed HLQ zone related trades, how best you can make use. Hope you all might have got clarity. So whenever you have doubts, please refer these two videos. You will get clarity. So thank you all for attending this video. Let's all meet again in our next lesson. Thank you.